Good evening, everybody. Sorry for the delay. Doing Webinado's downloading. Tonight we've got the great pleasure of having Guy Cohen with us. And I say great pleasure because he gets very good reviews or very good feedback on his information. So I'm not going to take up any more time. Guy, welcome to the Candlestick Forum. We're anxious to see your information tonight.
Be able to do that. So anyway, welcome to this strategy session. We call it the Big Money Strategy for Small Account Traders, but it's not restricted to small account traders. And I'll get into who I am in due course. I'm going to just see again my, oh, there you go, that's right. There is a disclaimer on this one, but you've seen disclaimers before. I'll win as well. Um, so when it comes to a well-defined trading strategy, we talk about the three master of investing, of trading, and they are market timing, stock selection, and then the trade plan. Now, if you think about it, it just makes sense, doesn't it? And what we're going to be focusing on tonight is the stock selection. When it comes to market timing, we're really trying to make sure that we don't just screw up. We don't want to be buying into overbought markets, that kind of thing. We can't be, it can't be too precise when it comes to market timing. When it comes to trade plan, we're talking about the control, and how to enter a trade, how to obviously make sure you have a stop in place, and then how to take your profits, how to make sure that you don't allow a decent profit to turn into a loss. So there's a mechanism to have that. But stock selection is all about what we'll be talking about tonight. So I'm not going to ruin it for you. We're just going to carry on going through the slides. Now it's kind of interesting to see how this works because it happens in a slightly different way. So what I'm used to now, is this strategy that I'm about to reveal to you today suitable for small accounts? Yes, it is, but it's also suitable for larger accounts as well. It's just that most people believe they've got a smallish account because they want to grow it, and it's a universal perception. Now, these guys here are, one's based in the US and one's based in the UK, and they thought they had small accounts. So here's Patrick. He made $4,500 in an hour, came up with this on the Telegram message. Simon, let's have a look. I've got a message coming on here now. Apparently I'm not audible. I'm literally talking into the mic. Can you just give me a wave? You see, you've got echo voice as well. I was getting echo voice too. I'm not sure what I can do about that, guys, to be fair. Okay, you say much better now. Okay, I'll move the microphone a bit closer to my mouth. Okay, so these guys feel that they've got small accounts. Now, I don't think they do. If you're making that much money in that space of time, I don't think it's got a small account. But again, it's a perception issue in many ways. These ladies, they did have small accounts. They started with about $3,000 each, and they multiplied their accounts significantly over a very short space of time. So it's there just to give you the confidence that this, what I'm about to show you right now, is applicable, whether you have a small account or not. We'll go through that. So first of all, we're going to go through why stocks. I specialize in stocks and stock options. I'm going to show you why. Then we're going to go through the secrets of growing a small account, kind of a bit of psychology there for you, but we won't go too far into it. Then we go into the mechanics of why prices move. This is really important. Once you understand the mechanics of why prices move, then you'll be able to anticipate a lot better than you may have done before. And then we get into the real meat, which is the big money. We follow where big money is going. We have proprietary algorithms, patented algorithms for this. This is everything about what we do, is we're looking to follow where big money is going for obvious reasons, which I'll go through. Then we'll go through a case study of how those ladies have multiplied their accounts, how you can follow what they're doing, and then we'll do a quick demo of how you find the best setup in a few minutes. And we're going to whiz through to make up a bit of time as well. So first learning point is why stocks? Well, when we look at all the different type of asset classes like real estate and bonds and commodities, let's talk about real estate first. With real estate, it's a great asset to have, but it's lumpy, it's illiquid, and it can tie you to debt. So again, it's all about balance in your portfolio. With bonds, you need to somewhat be specialized. With commodities, you need to have some specialization as well. Crypto, let's face it, guys, it is a gamble. And if you didn't think it was before the last few months, you must really understand that it is right now. And then there's Forex as well, a bit of a gamble. And I say that because there is no empirical advantage to be had for the retail trader in Forex. And what I am looking for specifically in my trading is where I can have an empirical advantage. And then you get the alternatives like, fine wines, art, classic art, and classic cars. Again, somewhat specialized as well. So what does that leave us with? It leaves us with stocks. Why stocks? They're very accessible, they're very understandable, and they are the one asset class where there is potentially an empirical edge for private investors. And the reason for that is one word, information. That's what we're going to talk about. Now, if you want excitement, then who's to say that stocks aren't exciting? This is Overstock. Overstock actually has done this a couple of times, actually, but 10x'd in 4 months, just 120 days, $1,000 to $10,000, no gearing. Now, that's not going to happen all the time, but stocks can also be very exciting as well, as I've mentioned. And also, you can start small, start whenever you want. You don't have to leverage up. There's minimal cost. You get fast feedback. You can do it anywhere. You'll choose how much you want to do, and they can be very scalable as well. And what we do is something that's very simple, it's very logical, and it's also repeatable. There's a word I really would love you guys to repeat all this session. It's a very important word. If you have a trading strategy that is not repeatable, then you don't really have one in the first place. Now, if stocks are just so wonderful, why aren't all traders millionaires? Obvious question. So give me a wave or shout in the box, however this works in this platform, if you've ever had the feeling of overwhelm where you had so many different types of techniques to learn, you just didn't know where to start. Now, pretty much all of us have been through that in our trading journey. And then give me another wave or say something in the chat if that has taken inordinate amounts of time, getting that learning curve, staring at screens with some strategies. We don't do that, as you'll discover. If that's been you, if that has been your experience, say so, because it's kind of interesting for me to see it, and also it makes me feel like I'm not just talking to myself, so that's kind of nice too. Now, all these things take time, and then there's the time taken to be chasing the Holy Grail, because everyone tells you they've got the best strategy, and then you potentially get burned because it might not be the best strategy, or it might not be the best strategy for you. So if you've been through that, just give me a wave on that one. Finally, who do you trust? In terms of a guru, a method, who do you trust? Now, in the professional world, they demand trust. And I work in the professional world, and this is what I have to give them. So this is one of my equity curves. This is for what we call a long flat model based on the kind of strategies we're talking about tonight. And I'm in blue, and the S&P is in red. So as you can see, it's about triple the S&P since this strategy launched 2.25 years ago. Now, I bring this up because I have to deliver proof. In this particular strategy, it is benchmarked against the S&P. Our aim is to beat the S&P. Are we beating the S&P? Yes, we are handsomely over the short term and the long term. But the problem is that most private investors never get past these hurdles, and therefore they end up feeling a little deflated. And again, if that's been you, at any point in your career, give me a wave on that one, because I understand. I've been through it myself. But stocks is why we trade stocks for that particular reason I've just outlined, in that they are scalable, they are liquid, you can choose how much you want to do, and principally they can convey an empirical advantage to you. Now let's go through some secrets of growing an account. This is a very quick section. As someone just said, I think it was, let me just see who's in the chat there. It was Bill said, KISS, keep it simple. And here's how simple you can make it. Trading's about people. It's about buyers versus sellers. And your job, our job, is to pick the winning team. Who is winning the tug of war? Buyers on the way up or sellers on the way down? That's the game, and that's all there is to it. Now, yeah, there you go. I need to get my mouse there again. If you are using charts that look like this, one, give me a wave, and two, I'll pretty much guarantee you're not making money. If you've got dozens of indicators, lines, squiggles, angles, numbers on your charts, all you're going to be is confused and getting further away from the basis that you're trading, that trading is all about people, right? Buyers and sellers. If, however, your chart is rather simple and can convey to you who it might be winning that battle between buyers and sellers in a systematic approach, in a simple way that you can understand, then chances are you're much more likely to make money consistently. Now, here's a guy who wrote to me on LinkedIn. He says, I can vouch for Dr. Cohen. I'm not a doctor, by the way, but he kind of made 88% profit in just under a year. So pretty cool. And he's put that on social media, so you can go and find that. You look out with LinkedIn. So there are three principles of growing any kind of account, whether it's small or otherwise: safety, growth, and mindset, and also keep it simple. And if you stick around to the end, I'll show you how to get this this manual and also a video series called Growth Secrets for small trading accounts. But it can apply also to other trading accounts as well. And I'll be telling you about a few other people who've been doing something. So actually, actual fact, there are some subcategories here within safety, growth, and mindset, and the idea is to keep it simple. Now, because this is a kind of short presentation, I won't go into the components of safety, growth, and mindset, but they're logical and they're simple and they're common sense. So don't bet the farm on any trade. Stick to a particular strategy. Specialize. Be fussy about the setups that you are trading. Understand the setups that you are trading. You don't need to be trying to trade 50 different stocks at any one time. 5 is plenty, more than enough. So those kind of principles, use the trade plan. So in terms of mindset, it's using guidelines. Some people don't like the word discipline. Guidelines is a better word for that. So know the rules of engagement for your particular strategy, particular things that you're trading. Those kind of simple principles that so many people just forget and make wrong. So moving on quickly, now we go into why do prices move, the mechanics of why prices move. This is a really important section. And then we get into the big money footprints. So imagine this beautiful home, and imagine the asking price is only $950,000. By the way, that is very cheap for that home. And I'm going to describe to you 3 different scenarios, all of which have a very important trading lesson for you. So scenario number 1 is everyone is bidding at the asking price. So everyone's making an offer at that price. Now, what's the result of that? What happens to the price? Nothing. It stays the same. And the learning point is that however many offers are coming in, big money could be thrown at this thing, but if everyone's bidding the same, the price isn't going to move. Again, if there's a waving mechanism, just wave and say, yep, that makes complete sense to me. If everyone's bidding the same, the price will not move. The second scenario is all about new public information. And what's happened here is that Google have decided that 5 miles down the road from this home, they're going to basically launch a new headquarters. They're going to have thousands of people working there. They're going to be well-heeled, well-paid people. They're going to want new facilities. They're going to want new schools and restaurants, leisure facilities, new homes. And so the neighborhood's going to get better. And so Bob gets the information, thinks, that's cool. I'm going to raise my bid to $960,000. So is Sue. And then you get the same information. Slides are a little bit wonky on this platform, by the way, but never mind. Hasn't translated perfectly. But you get the same information, and you now want to bid a higher price. So you're now bidding $990,000. Then Jim wants it even more, $1 million. You now offer $1.1 million. What have you got here? You've got a bidding war. And the word we want to use here is aggressive, because big money on its own wasn't enough to move the price, but big aggressive money does move the price. Again, give me a wave and just tell me, yeah, that makes sense. It's just pure logic, but it has an impact on the market. It has a direct relationship to what's going on in the stock market as well. But there is another kind of information. We're going to cover that in scenario 3. And that is what we call scarce information. Now, Bob had raised his bid from $950,000 to $960,000, and he's very hot on due diligence. He went around the neighborhood and he discovered that behind this beautiful home is a big parcel of land owned by an old couple, and he had a cup of tea with them in their kitchen, and they have revealed to him that they're willing to sell them this piece of land. And he's thinking, goodness, if I can put this piece of land with this property, I can do so many things. I can extend the size of the property. I can build new homes at the back. I can control that land. If I can put these two things together, that's going to be more valuable than the sum of the different parts. So the big part of all that is that only he knows, because the old couple wanted to be discreet. So he's now in possession of scarce information. And armed with that scarce information, he can now outbid anyone. So he's prepared to bid $1.2 million. So let's not let Bob get our dream home. Let's be aware of the fact that if you really want to be an outstanding player in the market, information is good, but scarce information is transformational. It could be life-changing, and that's the game. Now think about, sorry, the slides haven't translated properly here, but don't worry, we can carry on. Scarce information, what does that mean? Well, it means repeatable profits. Think of a diamond dealer. A diamond dealer has scarce information because they've gone to diamond school. They know about the cut, the clarity, the color, the carat, the source, much more than we do. You know, we just buy the things. Okay, and that's why they can make markups of 100 or 200% each and every time. You don't find poor diamond dealers out there. The same with Coca-Cola. It's a secret formula, scarce information. In that vault in Atlanta, that scarce information has bred a multi-billion-dollar company making repeatable profits every year. The same exact formula works with KFC with their secret chicken recipe worth billions of dollars. So scarce information, again, means repeatable profits. And what your job and my job to help you is to become, is to use scarce information so that you can be like the diamond dealers. So that's the mechanics of why prices move, and you now know why we focus on stocks as well. Now we're into the meat. Let's talk about the big money footprints. So what are the big money footprints? Well, there are footprints where you can see big, aggressive money. That's where prices move. Present already in the chart or lining up for more, or rather, and lining up for more. Now, 3 of these are readily available. We're going to talk about that, and you can exploit them at your leisure. And when you can identify these, when you can look at a chart, looking at these big money footprints, it'll completely change your appreciation, and it will completely change how you interpret the market as well. Very quickly about me, and I know that I'm probably quite known to you guys and to Steve and etc. But very quickly, I'm a nerdy kind of guy. I love doing the Rubik Cube as fast as I can. You know, that kind of makes me happy. I've made over 7 figures and thousands of % in personal gains. Made runs like $14,500, $7,000 in very short amounts of time, because that's kind of the way the markets work. You make your money in bursts. And I'm also the founder of Wise Traders, which is committed and dedicated to helping all private traders, private investors, to improve their trading by way of our proprietary technology and also specialized education as well. Now, you might have seen me on media like, you know, Reuters or Bloomberg, but more importantly, I've written best-selling books through the Financial Times and Wiley, and I've also had blue-chip clients. So New York Stock Exchange was a client of mine for 9 years. I licensed my options software to them. I did some data analytics for the International Securities Exchange. And really what I learned about these people when I served them as my clients is that when you're looking at big data, it really strikes you that it's not about trying to overcomplicate things. It just is about people. It is about buyers and sellers and the shifts in demand and supply that then can be translated and interpreted in a chart. Now, this is why, and also was led to why my systems outperform. So you saw this little equity curve here of the last 2.25 years, where the blue line is bigger than the red line. The blue line is our equity curve with millions of dollars. The red line is the S&P, the benchmark, and this is what it looks like when you start it from 2005. So we have more than 11x the S&P in that time. So pretty cool. And if you had $10,000 in 2005, if you put it in the S&P, you'd have roughly about $40,000. With us, it's $422,400. That's on an automated system using the intellectual property that you use today. And that's why I get paid the big fees. We also help professional money managers manage their client portfolios with these systems as well. So very few people that you might listen to out there in the trading education space will have this kind of backdrop to what they do. And I also have a community of private investors. One or two of you guys may well be part of that as well. And we help transform people's experience and results and ultimately lives. I'll give you an idea. Chloe, you'll meet as we go along today. She's 15x her account in 30 months, being quite conservative, as you'll find out. She almost gave up, but we turned her around. Roger, actually in retirement, he's now about 76 years old, but Roger's made actually more than $700,000 now, but he had 6 years of frustration, then found us, and then transformed his. And for him, he said it transformed his retirement life. So we're in the business of transformation. Now, where did this all start? How did I get here? Why am I here even? Well, just going back to 1994, 96, I was very ill with a nasty condition. I got rid of it. Then I did a finance MBA in 1996, 97. And these two professors, Gordon Gemmell and Kevin here, were two of my finance professors. And in this MBA, which would now cost $57,000 for 1 year, in different lectures, these two different guys, by the way, this one's the nerdy one, and this one is a visiting professor. So Kevin Connolly was a visiting professor, but a Wall Street professional. They both said in completely different lectures, they said if you want to make big money, you've got to be able to follow what the big money is doing. And the big money can be pension funds and insurance companies, but much more importantly, the big money that you should really follow is what the options traders are doing. And of course, this made complete sense to me because options traders generally are risking more in order to make more, certainly in percentage terms. And they're doing it because of the strength of information that they have. And so I thought this would be like my holy grail. I thought if I can follow what the options traders are doing, this is going to be amazing. And very quickly, unfortunately, I discovered that it was kind of like banging your head against a brick wall because it was very clear to me how long this would take. It would take years to figure it out. It would require immense amount of data. If you've dealt with options data, we're talking billions of rows of data over many years. I would need specialist quantitative egghead analysts. I'd need specialist programmers. I'd need industrial-sized servers. I'd need special expertise. And the whole thing would inevitably cost millions of dollars. So that was a little bit disconcerting. But in this journey, I found 3 other, what I call big money footprints, which can also be very, very useful and extremely make a lot of success just for them. So we're going to go through those in just a moment. Now, here's the main thing about big money footprints. There are elite traders out there, and they're trading with billions of dollars every day. The stock market of the U.S. is incredibly liquid. Their activity is pretty much invisible to nearly everyone, but there is a trail that can be found. And if you find that trail, then you can transform your results. You'll be consistent, you'll get rid of guesswork, you'll eliminate overwhelm, and you will save massive amounts of time. So here are the big money footprints. Now this has come out really strange. This is not how this slide is supposed to work, but let's go for it in any case. Remember, it's not just big money, it's aggressive money as well. Big aggressive money is what moves prices. So 3 first big money footprints. The first one begins with B, and it is the presence of, guess what? Big money. I'll show you what that means. It's actually volume. The second big money footprint is, yeah, you guessed it, aggression, because they need to do that too. But the third big money footprint is a very important concept. It's a concept of what you've got to think about is demand and supply and what's getting eyeballed on a particular security, what a particular stock at a particular price. And that's what we call levels. So we'll go through these one by one. First big money footprint, and by the way, just take notes, and you'll see the logic of this unfold. So the first one's big money. What do we actually mean by big money? Well, what we actually mean is recent volume acceleration. Recent volume acceleration, meaning that if you get big bars that are green, correlating obviously with prices rising, and these bars tower over any recent previous bars that were red, then you've got a potential accumulation situation. And the opposite would occur if you've got big towering red bars over recent green bars, and that could be distribution. So and what happens with accumulation is that there is effectively a shortage of supply, and what happens with distribution is effectively there is an oversupply, and that's also going to affect prices. So let's look at a very boring stock called GE, General Electric. That's not the most exciting thing on earth. This was just a year and a half ago or so. And if you see this big volume, this big towering volume spike, just let me know. By the way, is my microphone okay? Just let me know if my microphone is okay. Okay? My microphone okay? Just give me a wave or say something in the chat. My microphone, that's better when it's really close. Okay, I don't want to be lisping, but I will put it a little bit closer. There you go. So just give me another wave or whatever you do when you see the big money footprint here, the big volume area. And what that did, with a bit of help from other things, what that did was it led to an 83% move in just 5 months. And that's General Electric. I mean, who would know? Second big money footprint is recent price surge. Now, you see these eyeballs here. What happens is when a stock makes a big jump, up or down, particularly when it's as a result of earnings, but when a stock does that, it's actually going to trigger alerts all over various trading desks, professionals and otherwise. And especially if that stock then pauses, goes sideways or slightly counters that trend a little bit, giving it a breather, and then maybe starts to climb back up. That's the exact pattern I want to look for. I want a price surge and then kind of nothing, ideally followed by a slight pause. Now we might call that a bull flag or something like that. But the key part is eyeballs, because what they're doing is they're seeing the move, they're getting the pause, and they're going, you know what, we might want to be in this. There's more to this, because they've got the alert, as it were. When we see this in a chart, look at this one of ATAR. This stock went up from 3.5 to 9, then went sideways, and you think surely it can't go up anymore. But did it? It sure did. It actually then went more than doubled immediately after that. And that was 124% in just 4 days. So you see that one big move can often be a precedent for the next big move, but with a higher probability. The third big money footprint is the key levels. Now, you could be talking about the 20, the 50, the 200-day moving average. The 50 and the 200 are much more powerful for obvious reasons. And this is what happens. Paul Tudor Jones is the guy who made the 200-day moving average famous. He famously doesn't buy stocks unless they're above the 200-day moving average. Funnily enough, I was in with their hedge fund just literally 2 days ago. They have an office in London. We were presenting to them there. Now, this, too, is all about eyeballs, because once a stock will cross and hold through one of these key levels, it's on the radar. And so as you see, the stock goes through, pauses, funnily enough, and then carries on going. So this is a real thing, and it's just something, it's kind of one of those, one of these, I don't know what you call it. It's sort of, there's a word for it anyway, there's a couple of words for it, but it's sort of self-fulfilling prophecy. That's what I'm meaning to say there. So with a firm here, it kind of flirts a little bit with its own 50-day moving average at this point, and then eventually it goes. And actually one of those big bursts up is to do with earnings. So there's a big money footprint. When the stock is doing something around those key levels, I'm super interested, because it could be the beginning of a catalyst and a big move. So that moved 71% in 12 days. Now, let's put these three big money footprints together and see what we get. With GE, you got the big volume spike. You also had a decent move. Then you also had a cross and hold of the 50-day moving average. There's three big money footprints in play right now, and that's what's giving the juice for that 83% move in 5 months. The same with ATER, rather. 3 big money footprints are there. These volume spikes here, now they look small in proportion to what followed, but in proportion to what went before, these are big ones in themselves. There you get the big move, and then you get the cross of the 50-day moving average, leading to that big 124% move. And with a firm, again, we've got them. Here's volume spikes here. It doesn't look like it because they're dwarfed by what followed, but here these would be proportionally just as big. You've got the cross and hold, and you've got the big move before, and you've got then the big move afterwards as well. So the big money footprints all there together. And does it work on the way down? Absolutely. Here's TAL last year. You've got the big money footprints there. Look at the big volume spike there, the red one. And that can happen within 30 days of what you're looking for. You're not looking for something just today. You can go back and see if it's happened recently. Big move down. Obviously, that was the catalyst of earnings there. That's what that red bell there is on the chart. Catalyst of earnings. Down it goes through a key level. This time it was the 20. And then that went down another 64% in 32 days. Crazy stuff. Will it work with high-ticket stocks in the hundreds of dollars? Absolutely. Will it work with low-ticket stocks in the sort of sub $10? Yes, it will. If they're there. Will it work with short squeeze stock? Oh, yes. Love short squeeze. This is good, Rooks. This is beautiful. Look at earnings. Look at that catalyst of the move. Big move up through a key level. Keeps up through the key level. Big volume. By the way, when you get a big move at earnings, you're always going to get a big volume spike as well. And there you go. And 25% profit in 13 days there. I love aligning this strategy with short squeeze stocks, particularly in bullish market conditions. Beyond Meat was another short squeeze situation. Obviously, don't worry about where the stock is today. Look at what happened when the big money footprints were here. These are bullish big money footprints, and you can see it. And soon you're going to be able to recognize this setup over and over again because it's all we do. So that was Beyond Meat going up, I think it was about 50%, 57% in just a few days. And then there's Kirkland's. I'll come up with that a bit later. But when we look at what you've already picked up here right now, you can already get an appreciation of volume. Get my thing here of volume acceleration. You've already got an appreciation of price surge, and you've already got an appreciation for the key levels, and you could create your own filters for these so you can find them with some ease. Now, the next part is, the next thing we've got to look at is scarce information. Now, rather weirdly, this hasn't come out of my chart. This is Webinato for you. It kind of does some weird things with charts. But number 4 there is scarce information. Wouldn't that be nice to have a little bit of that in there as well? Because scarce information is life-changing. This was DIG, same kind of setup, but with scarce information as well. Get a little WhatsApp message from Rohan saying, thanks for DIG, it's been another winner this week, blah, blah, blah. People kind of write to me, say about how they're doing. Now, in addition to that, now this is, it's so funny the way this has gone. This has completely destroyed my my slides here. But anyway, in here it's saying scarce information. But in addition to those 4 big money footprints, what you also need is a robust trading plan. Now, a trading plan is designed to give you control from the very beginning and ensure that the winner does not turn into a loser as well. So my trading plan, I have a 4-step trading plan, and it is really simple, it's really logical, and it's really, really important as well. Now, if you think about what you've already got so far, you can filter for a group of stocks, say the top 1,000, because you only want to end up with a handful. You can already filter for recent volume acceleration. You can design a simple algo for that. You can already filter for a recent price surge. You can do a simple algo for that on a charting package, and you can already filter as well for recent hit of price levels. Now, you could add, the verification of a chart manually. You could select a stock for a trade. You could implement a trading plan as well. The only issue with what I've just shown you is that if you did it manually, it would take quite a bit of time. So in the ideal world, what we want to do is fast track. And how do we fast track? We fast track through automation. So automation can give us that. And in my Flag Trader program, that's exactly what we do. We automate this entire process. So with one button, we can filter the entire stock market, and already preloaded within that button is the big money footprint. So literally in one click, we can identify stocks which are exhibiting big money footprints in the way that we like to interpret them. Flag Trader also contains the right training, the other tools, and the support for you to help get to consistent profits. And depending on how fast you go at it, because it's not a huge program, just a few hours, you can literally be confident within sometimes days, sometimes weeks, and then establish that consistency as well. The main thing is it's a massive time saver because you have the time to do the other things that you want to do as well. Yes, I mean, someone said, is it a scanning program? Yes, it is, but very specific to our strategy, which I've obviously gone through the logic of. So here's how you do it. You log in a mobile device like a tablet or a laptop or even a desktop, doesn't matter, with your cup of coffee. You can literally leave it with one button. If you want to have one button that does it all for you, you can do that. And it'll find you those big money footprints, and then you will have the training by then to pick the best setups and trade safely. Now, this is something that's nice. We have a very interesting relationship with our members. This is David. I'm blown away by all the constant and continuous updates, developments, ongoing ways you make the system more intuitive and easier to use. I love you guys, but of course, you know that. So effectively, we are like a fintech, but we do fintech with particular strategies, our patented strategies, our proven strategies, and we don't deviate. We don't need to deviate. We just do one thing, which simplifies things significantly as well. Here's how it feels. By now, you should already look at this chart of CRISPR and go, that kind of looks a little bit familiar. Even though you haven't seen it, you've seen the basic setup. The big money footprints are there. And this yielded a very simple, easy 30% profit in just a few days. So this is the kind of thing you're looking at. And obviously, market conditions will have an impact on how often you see them. Now, this is Joel. He came to my Miami event for my options trading event, and he says, I've received your gift pack. We get a little gift pack there, particularly during COVID. And he says, but I have to tell you, the greatest gift is your software. It saves so much time. And combined with your trading plan, I've been able to finally start making consistent profits. This is the kind of thing that we're doing over and over again. And now Pat, who I introduced you to earlier, we're going to have a look at her in a little bit. She took her account from $3,800 to $33,000 from April to January. Pat's one of our regulars. And what you'll notice, whether it's Apple or Advanced Micro Devices or Amgen or Bristol Myers here, they all kind of look the same because they are the same. They're pretty much identical. This is what we're looking for. All the big money footprints are there, including scarce information, which we'll come on to in a few minutes. And they all started with a small account. Then Pat started with a small account and was able to multiply it. Now, I talked about scarce information just a second ago and earlier, and we talked about the diamond dealer, we talked about Coca-Cola, KFC, and we also remember that information, if it's public, is valuable. But scarce information is the life changer. That's what can really transform you. And let's go into that right now. So why do I get paid big bucks from professional money managers and publishers as well? Because of scarce information, the scarce information that I provide. Why do we outperform the indices, the benchmarks? Why do we outperform the markets over the short term and the long term? Because we're using scarce information. What were those professors talking about when they were talking about following the options traders? Ultimately, they were talking about scarce information. And if you remember, I said that it would take many years to do. It would cost millions of dollars. It would require the analysts and the software and the hardware and all those things. Well, guess what? It did. It actually ended up costing millions of dollars. It has required years of research. It does require billions of rows of market data. I do need quantitative analysts. I use those programmers, specialist programs. I have to have industrial-sized servers. I have to have specific expertise. And that's what we do. And because I am fairly persistent, this is what we ended up with. And here's what we did end up with. So Roger, who I mentioned earlier, making $685,000, it's actually more now, and having transformed his retirement life, what was he using? He was using scarce information. And the scarce information came in the form of a line that goes from -1 to +1, And when it's in the negative territory, he's looking at bearish situations. When it's in the positive territory, he's looking at bullish situations. Let's have a look at what it is. Well, this is my options volatility indicator, or OVI for short. And this indicator is the epitome of scarce information. Why is that? It's because it's patented. Why is it scarce information as well? Because very few people have it. I'm not a big marketing company. There are only literally probably high hundreds of people who have this. So by definition of the patent, and by definition of the few number of people who have it relative to the rest of the market, of course, it's scarce information. And obviously, more importantly than even that, is it has a track record. It works. It has a logic. And here's the way it works. When the OVI is basically receiving what I call hidden money, because no one else can see what the OVI is actually revealing. And so, which is bullish or bearish options trading sentiment. And when it's red, we would be hoping to look at a bearish stock. And when it's blue, we'd hopefully be looking at a bullish situation. So with Overstock here, going down in value by more than half, we would expect in a trending situation the OVI to be negative, and by and large it is. And when it turns the corner and goes positive, bullish trend, we would expect it to be blue, which of course it is. And when you get that cooperation between the two, then you have trading opportunities. Now the OVI is been assessed to improve performance by about 71%. But with these guys, with Chloe, she improved her win rate from 40% to 76%, almost doubling her win rate. And she was a loser before, and then she became a serial winner. And actually, so much so, not only did it lead to her traveling to Europe based with her profits, but it also meant that because I saw how consistent she was, she's actually now part of my team. Now with Kyle, he's a bit older. He went from a 3 out of 10 win rate to an 8 out of 10 win ratio. That's a huge result, and that made the difference for him and his Social Security checks as well. When we look now at a chart, we're not looking at 3 big money footprints. We're looking at 4 big money footprints. If you look at GE here, we saw that there are 3 big money footprints, but right in the middle of our faces was this big blue indicator at the same time. And that's the scarce information that you can see here. And the same went with ATER. That was staring you in the face. The scarce information big money footprint there, leading to 124% in 4 days. Remember, no one else can see this. The same with Affirm. The big money footprint there for scarce information was there, staring us in the face. And it was doing it with Roku on the way down. You see it's turned red there as the stock goes down. Each of the big money footprints are there. They just happen to be negative or bearish. So even there, Amazon, I showed you earlier, big ticket stock, there it is again. And with CRISPR, there it is again. And so on and so on. This is Kirkland's. This is a funny one. The stock was only $1.50. This was a couple of Junes ago. This was really funny because we saw it and we go, you know what, in the webinar and in my market reviews, and we go, you know what, this is a go. This looks kind of interesting. All the big money footprints are there. And it doubled in just 6 days. And it wasn't done because this is a guy Paul, who tweeted to say he's got his immediate P1. That's our code for first profit target. And then second profit target is P2. So he's sorting that out. But what happened then was it just kept on going. So it went up by 643% in 2 months, up to $13. And it wasn't even done there. So in 8 months, it went up by 1,222% in 8 months. Now, that was the power of scarce information. Now, I'm not suggesting you'd have hung on all the way or there would just be one trade. But you just see the scale of what could happen in that situation. This is Legg Mason. Now, this now should start to look quite familiar to you. Give me a wave if you say, do you know what, I kind of recognize what you're looking for here. I mean, just if it begins to feel a little comfortable, a little familiar now, because hopefully it will, and very soon it would do in any case. Well, what happened here was, it's resting above a key level. We've had the big money footprints. You think, oh, this is kind of interesting. There's scarce information. Look at it. Look at the scarce information in relation to what happened before. Nothing, nothing, nothing for ages, and then suddenly, something's going on with the other ones going on, and this is what happened. It rose at earnings, and then it was a buyout, 34% in 3 weeks. Interesting, but not that surprising. Goodricks, that short squeeze. Look, scarce information was there all along. The OVI was blue, leading to 25% profit. The same with Beyond Meat. That one, 57% in 2 days, the scarce information, big money footprint, was there as well. So you kind of get the feel of what we're doing here. And you see how specialized we are as well. Specializing is good because you don't waste time on other things. So let's now go through a case study of how Chloe in particular did so much with her account and the kind of stocks that she was looking at. Well, here she is. Remember, she 15x'd her account in 30 months. She is now one of my mentors. Okay. So this is Adobe. And just wave if you go, that looks like pretty familiar. I'm getting the hang of this now. Look at the scarce information there as well, giving you the heads up. 33.9%. Advanced Micro. There's the OVI. Look at it. And the other setups there. Pretty cool. 41.85%. Here's Marriott. Look, cross and hold. Big move. That's not the end. It's just the beginning of another move. Right there. There's the scarce information underneath. Here's the Russell. This is the Russell, an index. There's the scarce information. Here's the other big money. You can actually see the big money footprints there without even me showing them to you. 23.84% there. Here's Alibaba. Look at that. There it is. Here's the setup. Off it goes to 41.5%. Those are the stocks that she was playing with, and she was using herself. She was using deep in the money options. Nothing more complicated than that. Really simple stuff. Now let's just sort of do a kind of demo how you would go around finding those best setups in literally a couple of clicks. So earlier we talked about the manual way, where we could filter for the stocks and filter for the setups manually, and then verify the charts manually. Well, that's always an important part. Selecting the stocks and then implementing a trading plan. And we said, look, it's okay. This is okay. It's just a bit of a time hog. What if we could fast track it? How could we fast track it? Well, apply more automation. And so we have that automation where you can literally press a button and it will find you the optimal big money footprint setups for stocks and even options as well, just within a couple of clicks. And then you do go through the charts manually because you need that training that says, look, what's a better opportunity, what's a really good opportunity, what's not such a good opportunity. And then you have my trading plan to manage that trade for safety and low risk and ensuring that you're in control and ensuring that a good profit does not turn into a loss. This is exactly what I teach in the Flag Trader program. And here's that word that's so important that we talked about right at the very beginning, that word repeat, 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 repeat for scale. Because if you don't have a system that's repeatable, then you don't have a system. And if it's not repeatable, you don't have a system either. So here we have a repeatable system. We're applying automation to make it easier and easier and easier. So you fast track with intuitive software that you can use on your various devices. It's using my proprietary filter software for any account size. It doesn't have to be a small account size. And this is how we fast track it. You log in with your tablet or your PC or laptop, whatever it is, or Mac compatible as well. You find that fast filter. You can click on that button and you will find setups accordingly, which is pretty cool because it means you can be focused on one thing. Here was Vertex Energy. It's imagine that you would use the software and you see this setup. Now, if you look at this setup where my mouse is going around, you go, you know what, guys, that looks pretty familiar by now. And it does, because that's exactly what I've been showing you over and over and over again. And this is the kind of thing I love. And guess what happened? Up it went. So you confirm the chart visually and with some discretion, and then you can confirm that the big money footprints are in place. And you always need the OVI, that scarce information, and at least one other, if not two, as well. So we have variations of ones that you can filter for 3 of them. You don't have to have all 4 necessarily all the time. And then you trade it as per my trading plan, which is also super important. Now, what do people say who've been using this? Well, this is Henry. This is, I think, last year, and he was new to us. He says, I started trading with the OVI in May. I set optimistic monthly income goals. I am easily my trading goals. He made $38,000 on 3 trades, being CrowdStrike, Palo Alto Networks, and Pfizer. Pretty cool. This is what the quants say, the professional quantitative analysts, they say. OVI. The OVI stands up to rigorous scrutiny. It's a valuable, logical, and robust indicator, highly valuable in predicting broad market sentiment, because we use it for market timing as well, and identifying stocks that subsequently form, so stock selection as well. What do newbies say? So there's people who are quite new to trading. This is Bernard. He goes, first and foremost, using the OVI has increased my confidence and almost feels unfair or like cheating. Downside risk feels very low. I have learned to take my profits. There's your trading plan. And, his profits have ranged from 70% to 550%. What does a professional say? Well, this is a very big hitter, a very big hitter. Literally just wrote in recently, and I'm obviously in close contact with him. By adapting to your methods and putting some basic controls in place, i.e. my trading plan, saved me millions in losses. Now, I can actually now tell you how many millions he estimates he saved. It is 12 million. Now, he's a big boy, this one. He's a big hitter. So, again, we've talked about this for small trading accounts, but this is a big trading account as well. I suspect he's bigger than most. He made a lot of money in business, this fellow. What your fellow members, people like you from these forums, actually say? Well, the OVI is by far the best program I've ever done so far, and I love the personal relationship with everyone. So again, we're a bit like a family. So you can do this anywhere, anytime, from anywhere, on the beach or in a coffee shop or by a bar, whatever it is. And when you look at these charts like Boeing here, Halliburton here, Chubb here, Boston Properties here, you look at them and go, you know what, they kind of all look pretty similar. And that's because they were all similar at the different times they were happening. These all happened at different times, but they look how similar they were. And they all come in. It's like the bus. You don't get one for a while, and then you get a whole bunch of them coming up. That's what the reality of trading is. Profits come fast and furious, and then you take a little rest. So right now, the market's taking a little rest. Great time to learn. Great time to solidify your information. So here's what this Flag Trader program looks like. We have, for you, automated software to find those big money footprint stocks with a value of 1997, literally in a click. We also have done for you watch lists as well, where we've actually prepared the watch lists all in advance, both static and dynamic watch lists for you. So you just click on the button, you see potential stocks right there, 1997 value. Now, the training for this is super important, but we've made it super simple and easy to navigate as well. Bite-sized training videos to cater for the different parts of the program. So you've got the trading plan, that's in here, the 4-step trade plan, which is worth the entire price of the program itself, but also exactly what you're looking for and how to use the system. It's dead simple. And then we have live Q&A sessions regularly and priority support. Now, my support is difficult to beat. You've actually got people tweeting, thanks to your team for your hard work, thanks for your diligence and persistence. Excellent follow-up. We had a difficulty yesterday, but it was straightened out within minutes of me reporting it to support, so excellent follow-up. So we're known for this, and you can see by the actual applications I provide and the way we look after you, we really care. It's really important to us that we do everything we can to help you succeed. Now, this program is limited to 25 seats for a reason you're about to find out when I go through the bonuses. But even right now, you can see a total value of just over $8,000. If you were to go onto my WiseTrader site, you will find this program, and you can buy it for $2,997. And that would be great. I would love you to do that. You, though, might just prefer a discounted version of that. It's actually a 67% discount at just $997 as a Candlestick Forum offer special. Now, that's not the end of it. This is just the beginning, because I got some bonuses that I think you're going to really like, and that I think is really important. By the way, the link to go to is ovi.to/special. It's a pretty special offer. So let's now go into the bonuses. The first bonus is, there you go. Look, this is what the Webinato thing has done. It's just hidden my situation here. So bonus one is this scarce information filters. So scarce that it's actually been hidden from you in the charts in this translation. But that is scarce information filters. In fact, I can't write it because I haven't even got this. I can't even write it on this one. But scarce information filters. So the OVI is baked in to the filters and into the watch list as well. has a value of 1997. Remember, you cannot get this anywhere else. The second bonus is why we're limited to 25 seats. That is the one-to-one coaching session with one of my top coaches with a $1,500 value. And what you haven't seen, but I can show you, is how Chloe, I gave her this session when she joined years ago, and this is the thing that really turned it around for her. We designed a routine for her, made sure she was aware of the silly mistakes she'd been making, and this was what turned her around from a loser to a perpetual winner. So the one-to-one coaching session, super important. Now, the value of all this is now $11,643, but it's still, and you can still get it for $2,997 if you like, or you can just get it for $997 using this special link, ovi.to/special. There are two more bonuses. Here we go. And they are, first of all, the Ultimate Earnings Blueprint. What's that? Well, do you remember in many of the charts I showed you that little red icon, that red bell icon, which was the catalyst for big moves? That was the earnings date. And we have a couple of phenomenal earnings strategies that are all consistent with big money footprints and 3 master keys. So we bake that in. That is a cracking thing, because if you could just do that strategy, my post-earnings strategy, that would be perfect. So that has a value of $497. And then the fourth bonus is, well, you know what? If someone has actually been there and done it and dramatically improved their fortunes, like Chloe has and does, why not follow her? So we're giving you also her updated watch list as well. So Chloe's 15H watch list. And when it changes, we'll obviously adjust it for you automatically. So that gives you a total value of $12,737. You can get it at $297 if you like, but you know what? Use this special link I've done for Steve in the Candlestick Forum, ovi.to/special, and you'll get it at just $997. And if you do that as well, then you'll also get this written guide and the video tutorials if you take action now, only for today. And this guide and this video series, Growth Secrets for Small Trading Accounts, was written by me and guess who? You guessed it, Chloe, because she's been there and done it, and she can show you the way as well. Now, I do a guarantee, and it's a very simple guarantee, no nonsense, no quibbles. It's a 30-day guarantee. It's a full cash refund, no catches. We don't just say, oh, we'll give you something else, and we want to keep your money. We don't do any of that stuff. If you want a refund, we'll give you a refund. You've got 30 days to try it, which is plenty as well. Again, if you go onto our main site, you will find 7. I think you'd be better off going to ovi.to/special and getting it at $997. That will give you a 1-year subscription, full 12 months, and not only that, but the likelihood is that you're going to renew. And when you renew, you can also renew at that same $997. So it is a grandfathered price. There is a 25-seat limit here as well. And that's why we do it, because that's why we don't charge too much up front, because I'm pretty much going to guarantee that the vast majority of you guys, when you get onto this program, are going to want to do it over and over and over again. It's a transformational situation. So here is Mike in Minneapolis, and you can see this chart, and you go, you know what, that kind of looks familiar to me. I think I could do that. And, of course, he made a big win out of that. Was his biggest winner with Enphase, 150% winner. With the OVI. Pretty cool. And we have some high flyers, as you saw earlier. This is Steve. He made 53,000 and 7x on LinkedIn a few years ago now. This is Vinny, 7 out of 10 win ratio. That's much more important to me than the amount he wins. It's that consistency I love seeing from so many of my members. 34,000 profit on post-earnings Apple. Remember I talked about the post-earnings, that earnings bonus that you've got. But here's what I like to see. 8 out of 10 win ratio. Yeah, this is Doug. He 5x'd on Boeing, making $10,500. But I love to see nice high win ratios, just like Kyle, 8 out of 10 win ratio. You saw that earlier. This is an interesting one. This is Kedzie, real blue character in our membership group. Kedzie was addicted to newsletters. She had 15 newsletters. After us, she took it down to 1, saving herself lots and lots of money. But not only that, she writes in to say, oh, I've made $21,000 since January the 1st, which is only a few days later, and probably another $4,000 to $5,000 in the next hour or so. So pretty casual about how she makes her money. But yeah, we have a community. We are like a family. There are people just like you. These people are real people just like you. And this is our sort of big money footprints community, if you like. ovi.to/special. I will leave you with one little quote, which is kind of fun. But let's do a quote. Now, I don't do quotes because I find them all a bit pithy. Instead, let's give you a 4-letter thing to remember. It's not a ticker, actually, but it should be. Maybe if I ever go public, I will do this will be my ticker, TWYS, because this is what it stands for. The T stands for trade. I'll try and write this as neatly as possible. Trade. The W is for what, and the Y is for you, and the S is for C. Now, I have seen a few people repeat this mantra, and rather annoyingly, and say, oh, trade what you see, trade what you see, but they don't tell you what you're supposed to be seeing. And this is the important thing. So I'll tell you what you need to be seeing and what we see. We see the presence of big money. We see the presence of big aggressive money. We are seeing this is one here, key levels. This completely messed up my charts, by the way, my slides. The third big money footprint, because that's what we're looking to see, the big money footprint. So big money, aggressive money, also key levels being crossed and held, and also scarce information. So it's completely destroyed my slides there, but never mind. So big money, aggressive money, key levels, and also scarce information being that fourth big money footprint. So I leave you with that. There may or may not be time for a bit of a Q&A, but I hope that that's been informative, helpful, useful, and fun as well. And we can simplify your trading experience by looking at the essence of demand and supply. The difference that we have with what we do is that when we look at demand and supply, we can see it at that hidden level as well. We can see the demand and supply resulting from the scarce information, not just what everyone else can see in terms of volume and other things. The OVI gives you that scarce information piece that's missing elsewhere, which gives you tangibly a bigger advantage. We can prove it every which way, either anecdotally, but also empirically as well through what we do with our professional clients as well. So that's leaving you here with the final proposition stack. There is one extra thing I'm going to do because I have been asked before. I'm going to add it here for you right now as well, and hopefully this is nice for you. I'm going to get the pen out, and what I'm going to do is number 5 bonus. Because Chloe does use deep in the money options, I'm going to add in here an options, if I can write it down, an options 101 tutorial, because that's all you need at this one time, and then with Guy. Okay, so back to Steve and Jim and the gang, and I am here to help you do whatever you need. I'm not hearing anything, but it's over now, Raymond. Raymond, it's over now. Anyone there from Steve's? Oh, hang on, let's have a look. There's Jim. Let's have a look.
Yes.
Someone's trying to say something.
What are you looking for? Yeah, we're here,
Can't hear you, Jim.
Oh, this is Steve.
Okay, I can't hear you though, Jim. I can't hear anyone. So, Jim, I don't know what's happened to your mic. I can hear you now.
Okay. Yeah, this is Steve. What are you looking for, Guy?
Oh, I was just looking to hear what you were going to say.
Oh, okay. Oh, usually the feedback from Guy's information is always good. So this is where if you're trying to put the probabilities in your favor, Guy's already done that information for you with lots of research. So this is something you can add to your arsenal. Just another system that basically tells you your probabilities are going to be in your favor, and he's showing you exactly how to take advantage of the trades with options. So again, we get a lot of people on here that a lot of people say they're good, but there's a few people say, it doesn't work. Everything on Guy's information is always positive. So you want to take a look at this information. So is that all you have left, Guy? Are you done?
I'm just seeing a couple of cues there. This is R, Mr. R, or Mr. RZ. He said, what does the indicator OBI track? So I think you're asking what it does. Well, it takes all options information. So we're talking any information pertinent to pricing of options and liquidity. So what that means in practical terms is implied volatility, open interest, and volume of options. And we take that and we bake a cake out of those parameters. And the patented OBI, the patent refers to the fact that no one else can display those components formed into an indicator. So no one else, you can't even see it on any other charts, let alone have any kind of indicator on it. And obviously it spawned these hedge fund situations as well that we're involved with. So hopefully that's helpful as well. Danny says, how far out do you trade options? Okay, so let's just talk for the minute, Danny, about the most basic option strategies like buying calls, buying puts. The very least would be 3 months very deep in the money, or more like 6 to 9 months, but again, still deep in the money. So we're looking to trade what I call smart leverage. We don't go out the money. We don't go out the money. We go deep in the money, obviously where the liquidity is there, so that you don't get ruffled up by something that's out of your control. Because if implied vol starts to go crazy one way or another to adversely against you, that's just something you cannot control. That's just something that we can't control. What we can control is the quality of the setup of the underlying stock. So what we do is we use options. This is a very straightforward leverage proxy for it, and we don't want anything else to interfere with that probability of success, so we go deep in the money. Now, there are other things you can do, which I teach in my options courses, but just for now, think deep in the money and think let's get rid of implied volatility as a factor that can affect our trades. Hopefully that makes sense there as well. Type the link into your browser. Okay, so I'm going to do that, www.obi.to/special for you guys. Hopefully that hits. That should be doing it there. I just want to see if there's anyone else. I'm just trying to see if there's other comments and questions. Hopefully it was reasonably straightforward for you. I can't see any there. Steve, if you've got any other questions, just please let me know. Happy to oblige. While I'm here, I would like to just also say a thank you to all of you guys for being here patiently listening. I always find that you guys at the Candlestick Trading Forum are very knowledgeable. I like that. It does help me out a lot. Knowledgeable, you typically get the logic that we talk about as well, and you also make really nice members too. So if any of you guys want to join today, I know you're going to be nice members who contribute to our community, so I really like that very much too. But I also want to thank, obviously, Steve for hosting me, but also for Becky and Jim for also helping us out and making this all happen as well, nice and smooth. So it's nice. I've got some questions here. 2022 win rate. So I'll just give you an example, Steve, of our automated funds that we are actually going forward with one particular hedge fund with. It's up this year, whereas obviously the rest of the market is down. So that's 6% up. That was on the automated side, and it's a hedged model. In terms of what we would do in a really rough and tumble market like this, what we do is we're scaling back. So in a market like this, when the probabilities are so much less, we are we're a strategy that makes money in quick bursts and then slows down and then bursts. So if you think about blackjack, do you want to play when you don't have the right count in your hand? The count and the whole deck is against you, and the deal is winning. Well, that's when you scale back. Now, when you double down is when the house isn't winning. You've got a good count in your favor, and you've got a good hand in your favor. Now, hopefully that should make sense, but that's exactly the way we do it as well. So there'll be fewer big money footprint trades actually forming right now. That's not to say that you couldn't make money, because when oil stocks were on a tear on the way up, we could make money, and we did. And so it's just a question of understanding the market dynamics, and that's all in the courseware as well. And that's also in my weekly reviews. So we talk about whether the markets are healthy to help us trade successfully, or whether they're not. Because if you think that you can do the same in all market conditions, then that would be naive to think that you can. So you've also got to have the training, the perspective, and the sort of understanding that not all market conditions are optimal. And I think if you can just wave at me or something, it just makes sense. Now, in terms of Kathy, you have said here, what are my thoughts on the current market? So it's a really interesting question. So I gave a very important review last weekend. And it's really interesting. Steve, you would probably find this as well. But, even amongst us professionals, we have one or two people we probably quite like as well. And there's a lot of, let's be fair, there's a lot of nonsense out there, but there are a couple of commentators who are pretty good. But what's really interesting, the two that I quite enjoy to just check in with once in a while, it's really interesting because let's call it, commentator A and commentator B. Now, commentator A only really trades long, bullish, and commentator B is kind of like, he's a bit suspicious of system, and he kind of sometimes get a bit conspiratorial and all that kind of stuff. And what you see really clearly in their market analogy, or in their market commentary rather, is their confirmation bias. So, commentator number A, he only trades bullish, and he's always trying to find a reason for that. This could be the end. This could be the end of the downside. We're getting ready to go long. That's what he says. And he's a great trader, by the way. He's he's a top guy. But you see his confirmation bias there. He's looking for the way the market could go back to being a bullish cycle. The other guy, bit conspiracy theory and all that. He's like, the world's going to crap and all this kind of stuff. He has the opposite confirmation bias. So he's more bearish. So I'm telling you this, Kathy, because I'm going to tell you what I thought. So I specifically don't filter for a particular, bias. I'm looking at the market every single week, and I'm looking to see what I see. And literally, it is trade what you see. And I have a couple of other things that I do, which I explain to you in the courseware, and I explain to you in the market commentary. And I can't filter for these things. I show you. And here's what I saw up to last weekend. Obviously, it was a rough week. But what I have seen is that the downtrend in the markets that we've seen, in the last 6 months or so, seems to be slowing down. And I think, I can't tell until it's all happened, but I've gone on record as saying this. Go and see that blog. But I think that this is the very beginnings of the market trying to form a base. Now, don't be fooled. The base could form over weeks or even months. Okay? I think we are at the beginnings of a base hope that the market is trying to begin to form a base. And the reason I say it is because the downward moves that we have witnessed are starting to slow down. They're starting to get less and less in terms of their actual size. And that's the beginning of what one sees as a traditional base. So as you see in the answer I've given you there, Kathy, and anyone else who's interested, is I haven't given a particular bias. I've literally just shown you an interpretation of what I see. I just see that sellers have been beginning to run out of steam. And it's all about buyers and sellers. Just give me a wave or say something to me if you appreciate what I've just said there. Now, time will tell. We could still hit a new low, but it would just happen slightly more slowly or slightly more, we might get one final capitulation, say, and I think that would then be it from what I see today. Now, it could be in 2 weeks' time, the market's behaved in such a way, and I think, you know what, maybe that was a bit premature. But from where I sit today, I think the market is wanting and trying to start the process of putting in a base, and it will take a little while to do that. Now, from there will be market leaders. There'll always be leaders out there, and so we can start to be more focused on our bullish big money footprint plays, because there will be leaders that emerge before the rest of the market does, and even before the indices do. So hopefully that makes sense and is not punctuated with bias either. Clarence, we're not doing the Canadian markets at the moment, but it's not something that we can't do. We can do it in due course, albeit that the OVI really is only for the US markets. Steve is here. Go with trend, counter trend when needed. Scale back this last couple of years. Got to take your shot. Okay, good stuff, Steve. I like that. Thank you. Do you trade spreads? Steve says. Yes, I do. I trade. Obviously, I do certain types of option spreads as well, but that's for another conversation. Kathy says that makes sense. So I hope that was an interesting, because it's very interesting what you hear from many so-called gurus out there. They really want to nail themselves to a mast, and it sounds very compelling. Great, but really understand the concept of confirmation bias, and you'll see it in all walks of life and all things like whatever football or sports team you support, whatever religion you are. Your confirmation bias plays a huge part of the human psyche and human behavior, none more so than with trading as well. So be aware of it. We have to be very aware of it with our professional trading systems, and also the concept of overfitting. Most people, when they do back tests of retail systems, they're overfitting, what typically means too many parameters, too little data, and what ends up happening is you have a system that works great on the data you've tested on, but as soon as it has unseen data, it falls over. And you've probably, being part of this forum, you probably have quite a lot of experience in trading. You've probably seen quite a lot of things, and you've probably witnessed that in various other situations. Counted. So be aware of those two things, confirmation bias and overfitting. Next one is Steve. We will see next Wednesday after K-Pal makes his move, I know. And then Kathy says, as you said, trade what you see. Yes, and all I would say to that, Kathy, is it's not just the words, trade what you see, because I see other people are now sort of copying that. But it's what do you see? Can you define what it is you're looking to see? For us, it is the big money footprint. It is big money, it's progression, it's the key levels, and it's the scarce information. And a couple of others that you'll learn in the Flag Trader program as well. So I think that sorry, Steve, I know I kind of went on one there, but there was just a few questions there, and I kind of liked the questions as well. I thought they were really good and hopefully helpful to everybody. But I think that from what I can see now, I think we've done all the cues here, and I guess it's just again another big thank you to all of you to be here, and that's obviously you guys watching and listening and asking questions, but also to Steve and his team as well. So Steve, I guess over to you.
Thank you, Guy. Very good information. Again, all the feedback we get from Guy's information is positive. There's no gray area. So try it. If anything you can do to add to the probabilities of being in successful trades, with somebody's research that has worked or proven itself over a long period of time, you want to take advantage of that. You don't have to go out and reinvent the wheel. Guy, very good information. Everybody take a look at it.
Thanks, everybody.
Yep. We'll see you all in the chat rooms. Thank you.